Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, happy Friday.
Happy Friday to you. Affirm. It's made a little bit of a run from those April lows, but it's been a choppy trade. You know, they're losing their Amazon or Walmart partnership, but they've got other partnerships that they've got, you know, Costco, Amazon, and some others. What's your take here on data in Affirm?
Yeah, our data for Affirm shows that very clearly this is the buy now, pay later option that is winning among all buy now, pay later competitors, and by a landslide. If we look at, app usage, the monthly active users are at an all-time high, which we think is the clearest sign of strong consumer preference for Affirm's model. Affirm's ecosystem is accelerating really while others are in significant decline. And we can also see that on web visits. If you look at Affirm web visits, it's up 14% year over year, whereas competitors are all down double digits or more. So anytime we see that dichotomy between one in a group versus this competitor's one up in a significant way while all the other competitors are down, we know that market share is being taken. What we don't know and what, we can debate here a lot of times is, how healthy is the consumer overall? How stretched is their credit that they're getting from these buy now, pay later firms? So is the entire space in trouble or not is one question, but as far as the question of who's winning the space, with LikeFolio data, we're able to very clearly say it is Affirm.
Yeah, obviously, Andy, the risks in an economic slowdown, consumer spending, and interest rates are the risks to anything, just like it is to Visa and MasterCard, right?
Yes.
That's going to be risks there as well. But the growth in this company, the gross merchandise volume is exploding. Their credit card use, or their Affirm card use, is up to 2 million users and growing. All of their metrics are getting better. Andy, here's my question. Do you see any, obviously we know what this is, right? This puts the fees and the charges, it reverses them onto the seller, and the buyer just pays over time with no interest or very little interest. Is this company or this business model a threat to legacy credit cards? Or is this just a fad that's destined to go away because not enough people are going to use it and it's not well run? I mean, this company seems extremely well run. Are they a real threat to legacy credit cards?
Yeah, I don't know about a threat to legacy credit cards. I think there might be an interesting partnership or acquisition happen. If I were going to guess in the next year or so, I think Affirm is making itself a phenomenal acquisition target because they do things differently, like you said. And, for the consumer that uses them, what's really interesting is they just really simplified the entire process. They made it so that, okay, I'm going to buy this thing, I'm going to pay for it over the course of time, and I know for sure that my 4 payments on this are going to be X, and I know exactly when they're due. So it's not just getting thrown in with a bunch of other purchases that creates this large balance that has interest on it, that if I don't pay it off, the balance grows. And a lot of these things can be confusing, for a lot of the population. So Affirm simplifying that, I think, I was skeptical when I first saw the buy now, pay later space. I was like, okay, we've taken layaway to the masses and made it digital, but essentially that's worked. And sometimes you just have to tip your cap to somebody that just simplified an entire process and brought a whole new group of consumers into the real-time credit debt process. And I think they've done that. There's certainly significant risk in doing that, but so far so good in terms of a new business model that disrupts both kind of legacy retail and legacy lending. And so I like what Affirm's doing. And again, among all of their competitors, they're the best at executing against the plan that they have. And so if you're going to bet on a horse in this race, I think it almost has to be Affirm.
Yeah, you look at the partnerships I mentioned, Costco, Amazon, they got Target, they're losing Walmart to Klarna. And on that web compare graphic, Andy, that you guys have for us, I think it kind of reaffirms the fact that this thing is outpacing its competitors. But as more competitors get in this space, and obviously Klarna worked out some deal with Walmart to get that segment of their business, is that the key moving forward, that they have to keep adding more partnerships, and they probably will?
Yeah, I think that's one key. And then I think, and that's clearly a key. And they've been very good at that. Losing Walmart's one thing, but that almost feels like one of those that Klarna may have gone, really out of their way to get that partnership and made Walmart kind of an offer they couldn't refuse. But for Affirm, I think it's the partnerships is one side of the business, and then the other side of the business is just building that consumer demand, so that eventually when a retailer doesn't have Affirm, they lose business, and that Affirm can show, if Affirm can show that to these partner retailers. I think they're getting really close to it with the Affirm card, et cetera. I think if they can show that to these retailers, then the conversation becomes less about the details of the partnership and just more about how fast can we get this integrated. I think Affirm's getting close to that point through the consumer demand side of things. So they're playing both angles really well and have a history of strong execution. So we like their game plan, we like the coach, and we think that this is the winning team.
When you look at the stock, it's up from the last earnings about 15%. Are you guys still bullish on this one as far as your data goes?
Yeah, I think this company has significant room to run to the upside. Again, there's the big caveat of, if you're not a believer in the strength of the consumer, if you're not a believer in the stability of the credit industry in general, then you have to stay away from this. But if you are a believer in those two things, Affirm is a very good and well-run company with a very, very strong plan for growth that I think they'll be able to execute against.
Dare to bet against the U.S. consumer.
That's right.
Is what we always say on the show. All right, great stuff, great data as always, Andy. Appreciate it. Have a great weekend.
Thank you. You too.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down more positive commentary here on